Hey, it's Michael Saul, but everybody calls me Tiny, and this video is a trillion here, a trillion there. Pretty soon it adds up to real money. This is stock market analysis for the week of August 6, 2018. If you would like intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the instructions, confirm that it was you that signed up, and you'll be on the list to receive those updates. Join the Facebook group, facebook.com/groups/attackthemarkets. Answer 3 simple questions and you're in. If you want to be sure to never miss a video, hit subscribe and then the bell to be notified. Finally, if you like what you're hearing, give me a thumbs up on this video and leave a comment. So let's take a look at the market. Last week, the market came down and tested the 78.6% retracement. Well, at least the S&P 500 did. Let's not get too general here until we get into the individual indices. All right, so I talked about this in last week's video. You can go back and watch that. It's on the YouTubes. And we were pulling back, and I said I think we were going to run into support, and then I'm going to look for a pivot. So Monday we did hit support, got a little bit of a bounce, and Tuesday we gapped up and closed okay. I mean, we closed above the open, but it wasn't really a rip-roaring day. Thursday, we gapped down back into support, actually went a little bit lower, and then had a really nice reversal candle here. And I sent an intra-week update out. I only sent one out on Friday last week, but the title of that email was, "That Should Do It." Because I think that these two tests right here is going to be all she wrote for this little pullback, and I think from here we're going to new all-time highs. Now, I don't know how far we're going once we get to new all-time highs. I don't know if we're just going to put another huge leg in from here. And like I said in last week's video, and I will continue to say it, as we move higher, it is time to trail stops always. The attitude of, the Pollyannish attitude of things can't go wrong, this time it's different. Look at Apple, it just hit $1 trillion, which is why I named the video the reason I gave the video the title I did. All right, oh, things are just getting better, President Trump, this, that, the other thing, great. Okay, all great reasons for the market to continue higher. Doesn't mean it's going to happen. The market is long in the tooth. I am not a bear here by any means, okay, but to just sit there and go, well, come on, it has to go high. I mean, what does that mean? And I've actually heard that from people. I've heard people make the argument that the market has to continue to go higher. I just don't understand what that means. So am I saying sell everything and get net short? No. But trailing stops, always prudent, always a prudent thought in my opinion, but especially if we're getting to new highs. New highs are oftentimes a place where liquidation occurs, not initiation, right? Now remember, everybody who bought up here back in January is still stuck if they're buying the SPY, right? Individual stocks, of course, and some sectors and ETFs, a different story. But you can see here, they're still stuck. So what does new highs get them? New highs just gets them out, gets them even. Sure, people bought on the way up and they're profitable at this point, etc. But don't ever discount that, all right? There are bodies buried here. Look at this candle. If I don't throw it off the screen, look at the way this candle ended right up at the highs, which means it was buying into the end of that day, and everybody there is stuck. And the people that tried to buy it on the way down and didn't liquidate, right, they're just getting profitable. They're just seeing profits. So a lot of times, that's what is done at new highs. Profits are taken. All right, here's the Dow. Still lagging. I still think the Dow is going to go to new highs. Also, it doesn't have to. I really think the S&P 500 is going to new highs. I've been firm on that for a while. I am not coming off that. The Dow, I also think hits new highs too, so then all the majors hit them, but doesn't have to. Dow does not have to hit highs in order for this upside work to be done. Russell has been going sideways for a little bit. Mid caps, they look stronger. See if they could get a breakout. Here's the NASDAQ. NASDAQ looks like it wants to go to new highs as well. Let's look at some sectors. Semiconductors, they're lagging, but not looking terrible. Above the 200-day, above the 50-day. Could this be just wedging up here ready to go down to new lows, or new relative lows, not new all-time lows. But could this be wedging up just to trade lower, back down, and take out these recent lows? Yeah. But again, I want to definitely wait for a trigger. I don't want to try to guess there. Here's Clat Tanker showing some signs of life overall in a wide range. So here's NVIDIA, similar. Here's Intel. So Intel back above its 200-day moving average. That's good. Here's Analog Devices, which has really just been consolidating since hitting its high in June. It has been pulling back, but also more consolidating than anything. Here's the banks. The banks are showing signs of life also. Right after in July with this little panel, looked like it may have broke down. Instead, it's coming back up. Overall, it's just in a range, though. Bank of America, though, really nice move off the lows here. Citigroup right at its 200-day moving average. JP Morgan looks like it's headed for highs. It's out in front as a leader. The XBD, the broker-dealer, different story. Below the 200-day moving average, still acting weak. Goldman doing better. Goldman's more of a bank, although it is considered in the broker-dealer index. But watch to see if it holds the 20 EMA here. It's between the 50 and the 200, so it's more ping-pongy than anything. Here's Morgan. How about Interactive Brokers? Yeah, I mean, Interactive Brokers, just what a beautiful bull flag that just didn't work. Didn't fail, right? Failure would be it would come out and then fall, but now just more sideways. It just went sideways and then fell out. So right here, it's in a sideways consolidation. But if it breaks down, look for a test of 50. Here's the biotech index. So biotech's still holding out a little strong compared to the relative market. Here's the IBB, which is the NASDAQ NASDAQ bonds. NASDAQ biotechs, wow. Okay. Not even going to erase these screw-ups here. All right, I'm going to just leave them in to remind me, hey, pay attention next time. All right, so here's Gilead. Gilead looks like it is in a consolidation here. All right, let's see if Gilead can break, run up, try to get up to the 82.73 level. Here's Amgen. Looks like it wants to head to highs. Now we can look at bonds. Okay, so bonds still consolidating. A lot of people were saying, okay, this is the bond rally. All it did was churn here and then pull back. Talked about this in the Inner Circle membership, how everybody's putting a lot of faith in bonds rallying, and there's not enough evidence to prove that. I'd love to say I saw the short here, but I didn't. I just wasn't really totally bought. I didn't really totally buy into the buy signal. Here's oil right on its 50-day moving average. Here's gold. Yeah, still weak. Boy, gold is getting weak. And a lot of people saying, instead of people investing in gold, they're investing in Bitcoin. But Bitcoin's not doing so hot either, down at about 7,000 now. So it did get a bounce, but it gave it back. It was actually under 7,000 this weekend. So I don't know how much speculation is going there either. But again, I mean, my crypto opinion is I haven't yet bought any cryptocurrency yet via futures or the cash markets. I do have to believe that crypto will be a part of the financial landscape moving forward here. I just don't know if we've found the right pricing for it yet. Anyway, more on that maybe in a different video. But I'm not saying there's not opportunity in the cryptos. I think there is. I think there's a lot of opportunity here. I just think that right now it's time to look at what the next patterns are setting up in that space. And as always, I look at it from a technical point of view. But of course, there are plenty of underlying factors. All right, let's look at some of the glamour stocks. Amazon, yeah, just looks like it wants to head to 2,000, especially if this rally keeps going in the NASDAQ. Apple, first $1 trillion stock in history. Am I looking to buy it now? No. Again, it's more of a spot that if I was long, I'd be looking to get rid of it up here or pair it off or trail some stops. Don't think there's going to be a huge breakdown. A lot of people want to call the top here in Apple. I don't see why. But if I'm looking to get in, I'm looking for a pullback or a flag as always. Here's Alphabet. Looks like it's held the 20 EMA. See what that does. Netflix. Yeah, Netflix probably needs a little bit of work here to get a nice pattern to lean off of, but I do like how it came down and tested this breakout point. Just love how stocks tend to do that. This is where the breakout occurred, came back and tested it and held. How about the Zuck book? Yeah, the Zuck book was flying high ahead of earnings, had earnings. They say, yeah, you know what, users are down. It got smacked. Okay, now I'm looking for pattern, looking for a coil. And yes, the coil could release to the upside, doesn't have to release to the downside. Twitter, looks like Twitter is setting up for a small little continuation to at least the 200-day. I think it may even go through. Watch for support down here at 26.65. So again, the recap, I think we're going to new highs in at least the S&P 500 and probably the Dow also, although the Dow is lagging and maybe the Dow puts up a divergence and the S&P gets there and the Dow doesn't. It looks like the Russell is more sideways. Mid caps are performing better, and it looks like looks like they both want new highs, as does the Nasdaq. So again, I think that this was all she wrote on this pullback. Of course, I'm wrong if these lows get taken out, but we still have the 50-day moving average right under there. So I'm not calling for a big bear market if this previous breakout doesn't hold. Just not. Still have a lot of room to go until we get into bear market territory. And I know a lot of people will say, well, once it's under the 200-day or once it's 20% off the highs, blah, 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 etc. But, yeah, there's more to that than that makes a bear market, all right? But I think we're going to new highs here. I am watching for short-term weakness for long opportunities. Questions, tiny@attackthemarkets.com. I'll be happy to answer them. Don't forget to give me a like, leave a comment if you like what you heard. I will speak to you in the intra-week videos, in the intra-week updates or in next week's video. Hopefully I don't make as many mistakes as I did this week. Have a great trading week.